Good morning, this is Giuseppe Basile. I'm the analyst at trade. You can find at the blog fibstalker.com. I also post regularly on Twitter using the @fibstalker nickname. Good morning. Today is June the 6th and it's 8:30 in Toronto, Canada, where I relocated. And in this video I'm going to review the Euro FX currency futures contract as well as the dollar index. So let's start from what you see on the screen is the daily chart of the Euro FX currency futures contract. This is the continuous contract of the aligned to the June 2013 expiration. So those who follow me know that I have two areas of reference currently for the euro price, and the first area would be a long area starting in the 129.10 level, at 129.10 level, and down to the 127.15 level that was never pierced, as we can see. And this area found participation on the long side at the beginning of April, and then again mid-end of May, as we can see here. And on the other side there was participation of shorts of bears at the beginning of February, and then again there was this continuation lower with price reacting in the 132.40. Those who follow me know that I was short in this area, and I was looking for this first target 125.30 area to be hit, but actually we saw again participation of longs in this 129.10, starting from this 129.10 level, and this negated the move from the bears. So what we witnessed on Monday this week was this violation higher of the 130.80 level, and as I said, if that would happen, I would actually exit my shorts. And the reason for that is because now there is participation on the long side, and bears were not able to defend this level. So it means that we could actually continue higher into a second test of this 132.40, and second tests are always dangerous tests. So I don't want to be here with my position maybe waiting that this area is taken out and price with price continuing higher into this 133.55. So I think it's safe and it's good just to consider that longs are now in control, and we will need to test again what happens in the 134.32.40 area in the FX futures. And what we have seen in the last few days on a shorter time frame, if we see this, we can see this on the 4-hour chart as well. There was this participation in the 129.50 area, and that was traced from this May 29th low to end of month, the 31st, and this could only be observed after the fact. So it's now I'm tracing this just to show you, but it was impossible for me to trade this actually, unless you would have handled risk in a very very closely here. So, but as you can see, the first target, the 131.16, was hit. It was hit yesterday, so it means that there was actual participation on the 4-hour chart from this level, and now we could actually see a continuation higher. So if we continue higher, we could get into this second target, the 132 area, and then maybe even higher, but then the market will need to continue to trade in extensions, and that's something that is always difficult, especially when market is going to reach this level, this resistance level again. Other two scenarios I have in mind, So I mean, in the short on the shorter time frame, so something that you always have to be aware, but you also have to be aware of the risk on this smallest time frame, like the 4-hour chart. A possibility is that price retraces into the 130 40 area, and then it starts moving higher again into this 131.76 level, and the second target would line up at this 132.40. So we have to anticipate, and not expect but anticipate, some sort of profit taking at this level. Another possibility is that we move all the way halfway back, and I believe this this scenario would be more viable, not more viable, would be more useful for bulls, because in this case you would have a full retracement into this 129.70 area, and then a move higher into the 132.11, which is only the first target, and then the market will still have the possibility to continue higher and break this 133.55. If you don't have a position long, if price reaches into the 129.70 area here, this would be a good opportunity to take a long. But I'm not worried about that, because if I cannot get a long, then also program trading on the daily chart is not taking longs. I mean, program trading has longs in this weekly time frame, April and May, but excuse me, they don't have a long yet on the daily chart. So eventually this long will come, either now if retracing to the 129.70, or after and if we break the 133.55 level. Let's move quickly to the dollar. I want to show you the weekly chart first, and show you how the dollar reacted, of course, to this area of offer here that is located in the 84.25 area, and we could assume that maybe Bernanke has this 84.70, 84.60, 84.70 level as his line in the sand. He won't allow the dollar to move higher, although there are talks about a dollar at parity. Maybe that's not still the case. Maybe this is going to happen in the future, but I don't see it happening at the moment. And you know, and this setup short here in the 84, starting in the 84.20 area here, has targets below 75 in the 70 area. So we need to be aware of that. Moving to the daily, we can actually see that that level we have been looking at, and that's the trace from May 1st lows to May highs, actually pierced this 82.61 level, and that's a very important development in my idea, because even though we could get a retracement here before or after, we would get that, so don't be worried about that. We actually have at the moment there is the possibility we are going to retest this level here, and this is the level that has been pushing the dollar higher and the euro dollar lower. That's 81.40, having targeting this 81.70 area, which was never reached. And this is a very important point, because when program trading is not able to push a move, a well-formed move into target, it means that the selling pressure is very high, and that means that the dollar could have started its move lower. And now what could happen is that we get a retracement here, very similarly to what happened last year here, in at the beginning of August, and the 20-day moving average may or may not act as a resistance for this move, but eventually this should resolve in a continued move lower. And the point here is whether we do this move now, or we actually continue lower, and maybe this 81.40 level will find support again, and that would correspond to the euro basically piercing this 133.55 level. So there are very interesting times ahead. If you don't have a position in the dollar index or in the euro, don't worry about that, because there'll be retracements, and the next retracement is actually the actual entry in the longer, I would say, the long-term entry into a lower dollar. I hope this video is useful. If you want to get additional information, please go to my website. It's a blog, phipstalker.com. There's a lot of information there. There is also a free ebook I'm distributing on key concept to correct trading behavior, and you can subscribe my newsletter as well. And on the blog there are a lot of videos, and you can review my method and learn more about it. Thank you very much for your attention. I wish you a very good day. Bye bye.